Hello everybody and welcome to Livewire Markets. My name's Tom Richardson and today I'm sitting down with David Tuckwell, the co-founder and chief investment officer of ETF Shares. David's going to tell us about why he's launched a new exchange-traded fund business in Australia and its plans for the future. David, welcome.
Thanks a lot, Tom. It's nice to be with you.
First up, do you want to just tell us about yourself and your journey into the ETF industry?
Sure. So my journey into the ETF industry is a little bit different. I came in via the family route. My dad is one of the founders of the global industry, Graham Tuckwell, and I walked in the door very much through him. ETFs are the family trade, and I sort of hope to carry it on.
So ETF Shares, can you tell us what's the business about and what do you want to offer investors?
Yeah, so we're the first new index ETF issuer to arrive in Australia in over 10 years. And we believe that our entrance is significant because there hasn't really been the kind of proliferation of index ETF issuers that you've seen, for instance, in Canada, where there's over 20 of them, the UK, where there's over 30 of them. Here, it's a very small and tightly held market. What we're about is we're about trying to offer new index ETFs that aren't currently available to Australian consumers. And in so doing, we hope to bring prices down as well.
Okay, I think you've got 3 funds launched already. Can you tell us about them?
Absolutely. So the first of them is the Magnificent 7 ETF. Its ticker is huge. And what it does is it buys the top 10 stocks on the NASDAQ 100. You know all the names. We like this one because the Magnificent 7 stocks are just such big places. I don't think people understand how truly enormous they really are. And to give one example, Nvidia, its market capitalization is over $3 trillion. That's more than the entire ASX 200, all on its own. Now, these companies have been responsible for pretty much the guts of the EPS growth in the US and around the world over the past 5 to 10 years. And that product is really there for people who think that Magnificent 7 story that's probably familiar to a lot of people is just going to carry on going into the future. Our next one is the US Quality ETF. So it's a free cash flow product. It looks for the top 100 US companies by cash flow metrics. And again, the top stocks in that product should be pretty familiar to people too. It's your Microsofts, payments companies and other such. And we were interested in launching this one because the quality investing approach is very popular with Australians. So Warren Buffett popularised it. Famous active managers like Hamish Douglas popularised it. And if we look at index ETFs, there's a lot of popular products there too. So while there's a lot of popular index and quality ETFs, there's not one on just the US, which we thought was a little bit strange given the evidence of demand. So that's what that one's about, and the ticker for that one is BEST, B-E-S-T. The last one is the US technology product. It's the most straightforward of the 3. It targets US technology companies, and we think there's a fantastic investment case there. US tech has the highest margins of any sector in the world. The revenue growth has been higher than any other sector as well. And those two things together, higher margins, more revenue growth, is translated directly into stronger profit growth. And the stocks in that ETF should be familiar as well. The ticker for that one is WWW, like the internet.
Are there any particular reasons you chose to launch those 3 funds first?
Yeah, absolutely. So when we launch ETFs, what we're looking for is we're looking for evidence of what the market is consuming, and in particular, what is most interesting and helpful to financial advisors. Now, the best evidence for this, in our view, is to look at ETF flows themselves. The ETF market is in the main in Australia, in the US as well, in Canada too, driven by financial advisors. So if we do look at what ETFs are getting consumed, you have a proxy for what financial advisors want to buy. So if we look closer to the home market, most inflows into index ETFs in Australia go into international equity ETFs, and within that, in one way or the other, about 80 to 90% of that money ends up in the US share market. So that's the logic behind us wanting to go the US ETF route. We believe there's more strong and firm evidence of demand there.
Okay, the industry is fast growing. The low fees are popular with advisors and retail investors. How do you see the industry's future? So
I think we're going to see more and more proliferation of index ETFs in Australia. If you look at the numbers, the growth is through the roof. We're looking at a CAGR of about 31% or so over the past 5 and 10 years. And if anything, the momentum's only growing. We now hear and see self-directed mums and dad investors come to us, come to fund managers, very, very knowledgeable about how index ETFs work these days. They know who the market makers are and how they operate. They know exactly how the back-end plumbing around operations works. And there's a level of depth and sophistication there that you couldn't have dreamed of 10 years ago. So we think ETFs are going to have over $1 trillion under management within 5 to 7 years or so, the early part of next decade. And yeah, we're excited to be part of that.
Okay, more specifically, the future for your business, ETF Shares.
Yep.
Are there any other products we can expect to see in the future?
Yep, watch this space. We're excited about a number of areas in particular. One thing we're very interested in and we're watching very closely, we're keeping a close eye on, is fixed income. For mums and dads and for financial advisors trying to trade bonds directly in Australia, you have to go via Austraclear, and the minimum parcel sizes there are about 250 grand, which makes things a little bit difficult, I think, as I'm sure you'll understand for most investors. Whereas if you go the ETF route, you're looking at as little as $10 basically. So they're really an access vehicle to a part of the market that is, for most of Australian history, been only available to the big end of town. So without wishing to give away too much, that's an area that we're going to be. You can watch us in the future.
Great, thank you very much, David. So keep an eye out for ETF Shares, folks, as there's a new player in this fast-growing space. And if you like that content, please visit livewiremarkets.com or subscribe to our YouTube channel.